Hey guys, welcome to another daily market report brought to you by Mike York. Today is Tuesday, April 12th, and my apologies. I was meant to have this out sooner, but I had some technical difficulties. So with that in mind, it's we're basically capturing what's past the market close, so we're getting kind of the after effects. So I apologize. But we actually had some pretty good day part as a pretty good day as for bond market. So we'll talk about that in a bit. So the economic news releases that were scheduled for today were basically we had the NFIB Small Business Index. So what that is basically the small businesses basically was actually showing downward and basically that they're not too optimistic about the growth of the economy for the small business. Trade deficit was actually down, but that's kind of to the reason because we have import prices were actually upwards, and that's due to the weaker dollar. We need to get more improvement with our dollar, strengthen our dollar up so we can. It has some good things where yes, we're able to export more goods, but the problem is the weaker dollar is now creating higher gas prices since the oil prices are based off the U.S. dollar. And meanwhile, products that are coming inwards are becoming more expensive to the U.S. dollar because the dollar is weaker. So and it seems like most of the time we're importing more goods than what we have here domestically. So that's creating more inflationary numbers or inflationary pressures on us as a whole. Now, based on the import prices, they also were mentioned that they're basically lowering their expectations now for the GDP estimates. And that also had a trickle-down effect to the investors when it came to the oil futures. So now those guys are actually lowering their prices down on the price per barrel because now they're figuring a slower economy means less demand for oil, or which will obviously lead to ultimately our gas prices. So that could be good, but of course, when you think about it, most of our money now is being applied towards filling up our gas tanks, and then also the price of our food at grocery stores are becoming more expensive because the producers are actually raising their prices because of the cost of them to transport that to the grocery store to be able to sell to us. It's become more expensive. So with that in mind, obviously the economy is not going to grow as rapidly as we need it to grow because people are spending their money on gas prices and these extra necessities, whereas they could be spending money on other parts of the economy like retails and stuff like that, and try to get that economy moving. And if they get that economy moving, then we can also create more jobs, and that's where we need the growth to lie. So it's kind of holding us back right now. Also, the Fed budget was released around 11 o'clock Pacific Coast time, and get this: from February we're minus $65 billion deficit. Now in March it was 188 billion. Talk about free spending from the government. No wonder why we had almost a reversion or almost a government shutdown, because we need to get some more tighter restraints from our government employees. These guys are basically just throwing our money away here. This is unfortunate. Then also we got the reports with Japan raising their levels of the nuclear crisis to basically number 7, which is Chernobyl-like. This is right up there as one of the greatest catastrophes we've ever faced in terms of the nuclear category. So our hearts and prayers will still continue with the Japanese folks. We hope they can catch a break and actually kind of move forward with their lives. So let's keep our hopes and prayers for those folks coming. And next we'll take a look here at the bond market.
So here we have the bond market, and on the bond market, as we can kind of see here, yes, so as I mentioned, we're way up here. We had a nice, but unfortunately we didn't close up above there, so we're above the resistance. Unfortunately, we closed back to essentially where we started, so we didn't have obviously enough there to generate. Today we had a bond rollover, so actually with the bond rollover, it would have been 24 basis points. We would have started way up here. So really, we really did finish way up this way. So we had, hopefully we'll start a trend line upwards, but we did close up 22 basis points here. So mortgage rates have improved for the day today. As we saw, it's basically 22 basis points is what will factor in as they change. But I know that mortgage or interest rates did show some improvement. So Again, we'll watch tomorrow. We do get some volatility this week, but that was primarily due to what's happening in Japan. Is what people are pulling money out of equity markets, putting it into the bond market. So that's unfortunately bad economic